Good afternoon. Welcome to Midcap Radar. I am Reema Tendulkar, with me Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. Midcaps underperform large players in a volatile session. IT banks hold gains while utilities and autos dip.
Strong demand commentary spurs KRBL. The management tells CNBC-TV18 the basmati rice makers' market share will move closer to 40% by the end of FY23.
Rico Auto fires up on bullish outlook. The management tells CNBC-TV18 EBITDA margins will be in double digits in the coming financial year, with EVs making up 25% of their revenues.
Adani Wilmar surges on healthy volume growth across segments in the third quarter. It sees revenue growth in high single digits.
Piramal Pharma slips after its Lexington plant in the US gets 6 observations from the American drug regulator. Markson's Pharma gains as the board will consider a plan to issue convertible warrants to its promoters, and
OrbiMed Asia next week. All right, okay, those are the top headlines that we are tracking. A lot of stocks in focus. As far as the markets are concerned, extremely volatile. They have been choppy since we started the trading session. After a dip, it got bought, but again, it fell, and now we are seeing some gains again. But it is absolutely flat with some negative bias. The mid-cap side of things, they're underperforming, but there's no decisive move, so to say, on the Nifty so far. And it's really stock-specific action that we are looking at. The Bank Nifty, which was outperforming, continues to outperform. That index is seeing gains of around 200 points right now, and it has been able to hold on to those gains as well. IT Pack has made a comeback today, but of course, a couple of these consumption names are under pressure. Reema, after that massive fall that we saw yesterday, today when we opened in the red, the idea was that maybe we could continue with that fall, but it has turned out to be a very choppy session.
Absolutely flat right now. So if you look at the index, you won't imagine, right, that it's been a choppy morning. But you were talking about IT and how that's made a comeback with TCS, Tech Mahindra at the day's high. On the flip side, HCL Tech has started slipping quite a bit, and HCL Tech is now at the day's low. HCL Tech is underperforming the rest of the pack. We should just get that stock up for you. There you have it. It opened strong, but now it's down close to about 0.3%. Reports numbers tomorrow post-market hours. And remember, HCL Tech was the one which flagged our worries about Q3 earnings when they indicated that this quarter we are going to see higher than expected furloughs, and they're also in a way brought down their FY23 revenue guidance. What HCL Tech has to say tomorrow will be tracked closely, but there is some nervousness going into HCL Tech this time, clearly looking at the price action. But let's welcome Samit Chavan, the technical analyst at Angel One now, for a tech check on the market. Samit, afternoon, and thanks so much for joining in. Flat, defending the 100-day moving average of 17,906. Thoughts on the way forward?
Good afternoon. See, market has been consolidating in a range. So earlier the range was, around 500, 550 points, 18,300 on the higher side and 17,750, 800 on the lower side. This range has shrunk a bit. Now the higher boundary is somewhere around 18,150. And on the lower side, 17,800, 750 remains to be a sacrosanct support zone. So this is the third attempt in last 3 weeks. We are, attempting to snake below 17,750, 800. But we are quite hopeful as of now, and we expect, Nifty to surpass the higher boundary first. So the trigger would be 18,150, 200. Once Nifty surpasses 18,150, 200, we could see this, completion of this recent corrective move, and then probably Nifty can resume its higher degree uptrend. So as of now, market has stuck in a range, but we are a bit hopeful of a, breakout happening in the upward direction. So the, inclination would be on the positive side, and a lot of, despite the fact market is in a range, there are a lot of thematic moves that are playing out well. So it would be a prudent ploy as of now to keep focusing on such thematic movers, and till the time Nifty doesn't break, 17,750, 17,800, there is no real reason to worry for.
Okay, all right, Samit. So that is as far as the benchmark indices and the index level moves are concerned. What about individual stocks? What are you betting on?
See, although, overall IT space has been the real, dragger since last few months, emphasis is the one stock, from the mid-cap IT space that has been showing some resilience at lower levels. We are seeing good, buying interest somewhere around 1900, 1950. The stock has now surpassed 2000 level. So on the minor degree chart, we are seeing a, bullish breakout with rise in volume. So that clearly indicates at least, from a short-term point of view, this stock is likely to move higher. 2120, 2140, these are the next levels to watch out for as far as emphasis is concerned. And one can now keep a stop loss somewhere around 1990. Apart from this, the oil and gas space is buzzing since morning. And Oil India is the one stock that we are liking. This stock is not known for its, flamboyant moves, but the kind of price and volume breakout that we are witnessing today, stock is at 7 months high. It has surpassed its 200-day simple moving average, and the volume has been sizable. So this clearly indicates at least the stock is likely to come out its slumber phase, and from here on, 240 is the next target to watch out for as far as Oil India is concerned. So as a trader, one can keep a stop around 216 and expect a target towards 240.
Sami, thank you very much for that. Get into a break. On the other side, we'll be joined by Madhusudan Bhagaria, the CMD at Philex India. Stay tuned. Welcome back. Philex India is on our radar today. The management in a previous interview had told us that as and when China opens up, their domestic market is likely to do better. Because the Chinese markets were shut, Beijing was dumping goods at a lower price in India, which had depressed the margins of Philex India. Now that China has reopened up, has the Chinese domestic demand picked up, which can push up prices? That's the question that we want to ask. And plus, crude prices have eased. We are now joined by Madhusudan Bhagaria, Chairman and MD at Philex India. Mr. Bhagaria, afternoon, and thanks so much for joining us. Could you give us an indication on the Chinese economy? What is it that's happening? You had earlier told us about a lot of dumping taking place from Chinese manufacturers.
Yeah, good afternoon. Yeah, I was quite right. I think we can see the margins improving as China has started opening up. And the major impact once after the Chinese New Year, China opens up fully and people are also back to work. I think then we will see much more improvement. But we can see the signs of improvement in the margins. And also the dumping they have reduced. They have increased their prices overall from end of December and early January.
So what are the prices right now? How much have they gone up by? And once the Chinese New Year, which is typically in February, comes to pass, what could the extent of price increase be? And how much have they reduced their dumping in India? Some numbers, sir.
I think their prices have gone up by 3 to 4%. And the imports have also reduced quite a bit, because whatever people have booked is in the pipeline, which will come by end of Jan and early Feb. And Chinese New Year is on 22nd of Jan. So by end of Jan, Chinese New Year will be over. And I think from 1st of Feb, they should be in full swing. So from Feb onward, we see much more improvement. I think another 3-4% should improve after 1st of Feb.
Okay, so more improvement is what you're seeing. The second thing that is working out for you is crude prices. They have, of course, fallen off substantially from the peak as well, a major raw material for you as well. Considering the China opening up and crude prices falling as well, can you give us a sense of what the margin band would look like for you? Because that was under pressure in the quarter gone by. What will margin look like in FY23 and FY24?
See, FY23 more or less is gone, so we've not been able to have a better margin. I think last quarter we had around 4.5% of EBITDA, and you would have a similar EBITDA in this quarter, third quarter. But fourth quarter we could see around 6-7%, and then going forward, FY24 we should be able to do, I think, double digits.
Okay, so FY24 margins should get back to double digits. So last time you had said that the export markets are a bit subdued. Can you tell us how are the exports doing? How much does it contribute to your overall revenues?
So right now it's very low, it may be 3-4%, because China has been dumping all over the world, not only in India, and it was difficult for us to compete all over the world in the prices which they were giving. But now they have started increasing prices all over the world. So slowly, I think the export should go. I think in the fourth quarter, we should be able to do around 5-6%. But then from the FY24, I think we should be doing around 12 to 13% as a result.
Okay. So if margins are looking better, so you are saying, of course, things are looking better even in the export markets. Can you give us a sense of your expansion plans then? Because you're working on a pilot project for recycling any form of polyester waste into chips. Is it a business opportunity for you? What kind of addition or opportunity are you looking at here? The capex, and what stage are you at in this pilot project?
See, this is a R&D initiative taken by our company. This is, we are trying to develop a technology to recycle polyester waste and pet waste and fabric waste into polyester, which is as good as virgin. And there's a huge demand for this in European market, and all the brands have taken a pledge that they would use 100% recycled. So we are trying to develop our own technology. We have built a small plant to replicate the technology, and then we'll go for a bigger plant.
Okay.
So we are trying it out. I think we are close to finalizing the technology. We have, I mean, you can say almost 85-90% success we have had. Final small glitches are there. Once that is over, then we will build a bigger plant, let's say around 100 tons per day. That will take 1.5 years to build, and would cost around 150 to 170 crores. Otherwise, we are doing some small expansion. We are adding a small POI capacity of 30 to 40 tons per day in FY24, and also we would be adding one more kind of a polyester, which is cationic polyester, which is easily dialable. So that we would be adding of around 70 tons per day. So all this will come up in end of FY24.
End of FY24. So what kind of capex are you putting here? How will you be funding it?
This would be not more than around 80 crores, and that we will finance it through internal accruals.
Okay.
And once we take up the recycle project, of course, that we will put up in a subsidiary of the company. That maybe we will go for a 50% equity and 50% loan once we take up that project.
Do you think you will take up the recycling project in sometime in FY24? The manufacturing will be...
I think we would start the process of building the plant somewhere in FY24 and would get completed towards end of FY25.
And what would be the benefit? You told us that the capex would be north of 100 crores, 117 crores thereabout.
Yeah, right.
What would be the benefit?
Benefit, I think the top line could be around 400 crores, and we could have a EBITDA around 75 crores.
Okay, all right. So that's from that particular project that you're talking about.
Only that particular entity which will be created.
Oh, okay. All right. So last question before we let you go, value-added products that has been increasing as a percentage of your revenues. You increase it to around 77%. How much higher are margins on these products, and the new capex that you spoke about, do they fall in the value-added category?
Yeah, the 70 tons of cationic, which I said, that adds into specialty polyester. So that will have a better margins. And the margins in a value-added is around 3 to 4% more than the normal ones.
Okay. All right, Mr. Bhagiriya, thank you so much for joining us and telling us all that's happening on ground in terms of demand, China dumping as well, and the outlook on expansion plans as well. So that's Philex India saying that yes, things have improved as far as dumping from China is concerned. It's reduced, prices have been hiked, and the expansion plans will aid their revenue and profits as well. Let's slip into a short break. On the other side, in our special segment, Midcap Spotlight, we'll focus on Rico Auto, which has gained over 85% in past 6 months. Stay tuned. Welcome back. We're still tuned into Midcap Radar on CNBC-TV18. Well, markets, they continue to be volatile, but stock-specific action is something that we are looking at today. And this is our special segment, Midcap Spotlight. So we will focus on Rico Auto and what is driving the moves that we are seeing on the stock in the last 6 months. Surbhi.
Hi, thanks for that. So Rico Auto is buzzing in shade today, and in the last 6 months, it has gained over 80%. It is an auto ancillary company with core competencies in aluminium and ferrous casting auto components. 50% of its revenues come from the passenger vehicle space, 35% from the two-wheeler space, and the remaining 50% from the commercial vehicle space. 38% of their revenues come from engines and 22% from transmissions. 7% of their revenues come from EV components, and that is what the street is excited about the most. Now, that could work in the favor of the company, as management alluded to us earlier that this 7% of EV components could go up to 25% of revenues in the next few years. Apart from that, they are expecting a revenue growth of 15 to 20% every year. Their FY22 revenues were 1860 crores, and in FY23 they expect a revenue of 2400 crores, which is close to a 30% growth year on year. and they expect double-digit margins going forward. Their FY22 margins were 8.5%, and by FY24, they expect margins upwards of 10%. And lastly, what could be working for the company as an increased interest from institutional investors.
Thank you very much for that. Earlier today, we also spoke with Arvind Kapoor, the Chairman and Managing Director of Rico Auto Industries, about the order pipeline and margin outlook. Listen in.
In this calendar year, we have actually booked further orders for the future, which is to the tune of almost 1,400 crores. And out of which, almost between 75% plus minus 5% is what the electrification space is. We did announce that. Next stage, you'll see that we are doing the double-digit space as far as the margins are concerned, and for the next year. And our growth for the next couple of years would be in the region of about 15% plus. I would say around 20% that we are looking to grow for the next couple of years.
All right, that is the word coming in from Rico Auto, but there's one more stock which is in focus today, Piramal Pharma, on the back of fresh brokerage notes. Ekta is telling us what is the brokerage making of Piramal Pharma. Ekta.
Thanks for that. Well, yes, another note which is coming for Piramal Pharma. It's been active on the brokerage front. Axis Cap has initiated coverage with a buy and a target price of 160. According to them, there is a CDMO recovery ahead. Valuations are attractive. They are well positioned to monetize the significant potential in the CDMO market. This is given the increasing China +1 opportunities. They expect a margin recovery to 18.1% in the second half of FY23 and 16.3% in FY24. And 14.5% in FY22. Remember, Carlyle bought around 20% at an equity value of around $2.45 billion in October 2020. It currently trades below $2 billion. Any potential corporate action such as promoter warrant or further infusion by a PE to reduce debt can be a re-rating catalyst. Separately, there was additional news which came in for Piramal Pharma. The US FDA has issued a Form 43 with 6 observations for their unit in Kentucky. And they said that it is a voluntary action indicated status, or the observations are related to that, and they are not related to data integrity. Remember that Piramal Pharma has an extremely strong track record when it comes to compliance, and hence the street wouldn't really be too perturbed with any kind of US FDA observations that it has seen, simply because of the pristine track record that it has had.
Thank you very much, Ekta, for that. Still flat on the benchmark indices, but underneath the surface, Bharti Airtel is making a recovery from the day's low. It's recovered close to about 1.8%. So Bharti Airtel, just pull that up, still down close to about 3.5%. But it started off the year on the back foot. Year to date, Bharti Airtel is down 5%. Last year, it had outperformed. Bharti Airtel last year was up, I think, close to about 18%, while the markets were up close to about 4%. So there was an outperformance of nearly 14%, but you are seeing part of that getting reversed. And separately, on IT, because IT is doing very well, the street has been very worried about the top line. The revenues are going to come down. In FY23, IT companies will see a growth of double digits, 13, 14, 15%. Next year, FY24, growth rates are expected to be 6, 7, 8%. Okay. One, because of a base effect, and two, also because of macro uncertainty, right? The base effect does play out. So it's a combination of these two factors. But despite the top line being at about 6, 7, 8%, the EPS growth, according to all the brokerages, is going to be in double digit. Okay. And ultimately, your valuation is a function of your EPS growth. So EPS is going to be in double digits because margins are improving. Attrition was a problem last year, but it's not a problem today. And that is one of the reasons. Margins will improve, driving a double-digit EPS growth. So that could support valuations for IT companies.
Okay, bottom line is sanity, right? That's what they say. Thank you, Rima, for explaining that to us. And with that, we'll take your leave on this edition of Midcap Radar. Your stocks when we return.